What's going on, everybody? Welcome back to my YouTube channel. Now, this lesson is very important, guys, because your thought process is your biggest weapon in this game. Every strategy works until emotion takes over, because consistency doesn't come from a setup. If you're still chasing perfect patterns, then you've already lost. It comes from the chain of thought behind it. So in this video, I'm going to show you exactly how to think through your trade using two simple techniques: the 1CDT method and the 2CDT method. Both entries are clean, structured, and repeatable. Now, if you don't know me already, guys, I trade a system called the Candle Deviation Theory, CDT. It's built on one simple truth: every single day, one candle will close either bullish or bearish. My job is to read that single candle story and then manipulate its range using lower time frame precision. So the first example I want to share with you is on pound USD. Now, this is a trade that I took. As you can see, it was a break-even trade. Unfortunately, we got quite a rapid movement to the downside, anticipating this candle to go bearish. So what we see on the hourly time frame is clearly a bullish candle close. Now, if you know the two candle theory method, which is the foundation of what I'm trading now, you would understand that the idea would be that the next candle will continue bullish. So in analyzing this, before I went in for the sells, I did mention in NDS that there is no reason for this next candle to continue bullish. We have a very extended hourly structure. We hardly have had a pullback. And truth be told, we have a small to medium range hourly candle, meaning that the next hourly's range could be much bigger in the continued direction. Now, we don't trade in the opposite direction until we have evidence as to the reasons why we can. But I did mention, I probably could just post it up here in a screenshot. I'll get that up so you guys can see somewhere at the top. But I did mention the overall weight of the market is bearish. As you probably can see here, it's very heavily bearish. On top of that, we also have a new hourly candle that's open. So just consider that the previous 4-hourly candle, a new 4-hourly candle that's open. Consider we have a previous 4-hourly candle that has closed bearish. So just to show you an example of that, which is this information here, which could indicate that when the new hourly candle closed, or the previous hourly candle closed and the new hourly candle opened with the new 4-hourly candle, there was a higher chance that we could create a deeper pullback to create that bottom wick if we were truly ready to go bullish. So with that in the back of my mind, the thought process was, well, look, if we are going to pull back on the 4-hourly, then now is the time with the new 4H candle. If the hourly candle is going to go bearish, then it's going to do a few things from a behavioral perspective. And also, as well, I have an opportunity to trade this back down to around 50%, which, as you can see here, is around here, and then manage that trade to break even, which is exactly what I did before it spiked back up and then continued in my direction. So that was the thought process behind this. Now, how do we get into the trade? Well, as I said, there's no reason for this candle not to continue bullish. So what I've got to first see is price attempt to continue bullish. So as you can see here at the open, price immediately pushed to the upside. So in and around this area, this is where the top wick on the hourly candle had been formed, as you probably can see around here. So it created a decent enough wick pullback, which means the anatomy of a candle formation is wick first, body next. All right. I'll explain this in one thought process in a minute. So now that we've got the top wick, what I anticipate price to do at this stage is I anticipate it, if it's going to continue bullish, simply create a trend with a structure like so. So now we deviate bullish on the break of the higher, we continue higher. But as you can see, after price attempted to go bullish, it completely collapsed and failed. So now we have a depletion in that bullish sentiment. Then we have a pullback, which is necessary to enter a trade, because if we cannot anticipate a low high being formed, then we cannot anticipate a break of a low, meaning a new downtrend that is about to reset or develop, should I say, in this instance. So once we have price pulling back, after price failing to continue bullish, a complete collapse of that sentiment, price then pulling back, which will create that V-shaped pattern, just a simple trend pattern, and we break this low, that means that my thought process of the market being heavily bullish, the 4 hour candle pulling back to create a wick before potentially flipping bullish has aligned. So if you can see here at my crosshairs, on the break of this low, the hourly candles create a top wick and it's flipped bullish at this stage. So once it's, flip bearish at this stage. So once it's bearish, what does that mean? Well, it simply means the candle's going to continue to drive bearish, along with the confluences of the previous 4 hour candle closed bearish. The new 4 hour candle is going to create a bottom wick if it's going to continue bullish in line with the hourly. And I can trade this back to around 50% of the previous hourly candle for a break-even trade for management. So if it does decide to go to 50% and continue up, then I can obviously manage the trade, which I did. In that instance, this makes the thought process of this trade completely perfect. Now, what if I'm the type of trader who says, hold on a minute, I'm not interested in looking for sells. I'm solely focusing on the 2 candle deviation theory method, which means that even if the thought process behind me selling this was correct, I'm only looking for buys. Well, as you can see here, price attempts to go bearish, which now is just a development of a bottom wick. Now, at this stage, it is truly, well and truly bearish. So you could just assume that it will continue bearish at this stage. But you can see on the hourly, price comes back into this wick rejection area. We've seen rejection before. Price closed bullish, meaning we anticipate the next candles to go bullish. If we see price completely collapse and fail, meaning that price is reacting to these areas, it cannot maintain that bearish sentiment, and we start shifting to a bullish sentiment, then why can't we buy it? Well, you can. And here on the break of this high, you will see on the hourly candle that not only have we been bearish, we failed to maintain the bearish sentiment. Now at this point, we have flipped bullish. And as I said, you at least want one minimum candle in the middle. We have an uptrend that's forming. And then at this stage, we have that one candle in the middle. We create this pattern, which means that this makes this a viable buy. Now, there's some nuances that you'd have to think about if you want to buy this in terms of patterns. But in terms of process, this makes this completely fine. So the question is, if somebody buys this, which somebody did, and they held this trade, and I can assume based on the process of trading, I mean, it was a pretty decent trade, then that's a perfectly feasible TP, 3R. Okay. So if somebody is selling this, which was me, if I'm selling this, does that mean that I was incorrect? No, it doesn't. Because everything that I've spoken about in terms of the confluences that make sense in this scenario is repeatable. So if I believe the next candle is going to continue bullish, and then it fails to maintain that bullish sentiment and collapses, then that means that their price continues bullish, completely collapses, okay, and then flips bearish. That means the idea of this candle closing bullish and the next candle going bullish has now been invalidated. The anatomy of a candle formation is wick first, then body next. A wick rejection often represents a depletion, meaning that the bulls couldn't maintain that sentiment. If we now flip bearish, all those confluences that I've just mentioned align. So now we can maintain the sentiment that once it's bearish, it will continue bearish. So my thought process is perfect. Now, what about somebody who took the buys? Well, if you're saying to yourself, I'm not going to confuse my processes, trade in 1 candle and 2 candles. I'm going to just focus on 2 candles only. Here's how you approach this. Butt bodies, failure to break, previous candle bullish, next candle bullish, depletion. So we're reverse engineering this, depletion in that bearish sentiment, wick anatomy, which is wick first, body next, candle flips bullish, belief system, it will continue to drive bullish. Correct thought process. It's magic. It's magic. Now, there's one thing that I would say to you is if you're starting out or you're finding inconsistencies with your thought process, you want to stick to one or the other in the beginning. Now, I took the sales because I was happy with the thought process. It's consistent. There is no contradiction in the way that I took this trade. I would ever take it again in the future. But if I said to myself, I'm not taking the sales, I'm looking for the buys, then this is clearly a viable buying opportunity also. But if you find yourself taking the sales and you get break even, and then you look for the buys and you have not consistently mastered one or the other, then you could find yourself taking everything. So it's very, very important that you master one first, then move on to the next. Okay. This is a fantastic lesson, guys. I really do hope you understand what I've gone through here. There was a lot of explaining in the beginning. We ironed it out at the end. And if you go back to my last video, it would also help you put the pieces together. Anyway, if you enjoy this video, guys, press the like button, subscribe, turn on notifications, and as I always say, continue to trust the process.